Tesla by Esla. I am buying the dip like I have never bought the dip before. Welcome back to Strongman Personal Finance. So Tesla just reported Q2 earnings, and the stock is down 2% on the day and 7.45% in the aftermarket. Apparently, the earnings weren't that great, huh? So let's go ahead and go through the slide deck, and we're going to see what happened to this wonderful company, because Tesla is the future. Regardless of anything that happens to the fundamentals, Tesla is the future because it is, because Elon said so, and people like Tesla, right? So let's go ahead and look at it. 1.6 billion of GAAP operating income in Q2 after restructuring and other charges of $600 million. So apparently they had some kind of restructuring cost, which I guess they're trying to, spin that as, well, it's just a one-time cost, but, it still affects your profits. So they had 1.6 billion of operating income this quarter. Let's go see what they had last quarter. So we see in Q2 of 2023, they had 2.4 billion of operating income. So we have a decline of operating income of, well, I guess they'll show us later, but pretty significant, okay? So their profits are dropping, okay? Now, if they didn't have that restructuring charge, they would have had 2.2 billion of profits, which is still a drop from the prior year. So I don't know why they even included that, but okay. GAAP net income, so they're still GAAP profitable. That's on the accrual basis of accounting. Operating cash flow, let's zoom in here. Cash flow of 3.6 billion in Q2. Let's go look at the prior quarter, see what they had for operating cash flow. 3.065 billion. Wow. So they actually increased their operating cash flow. Now, I believe this was because of a difference. They deferred buying a bunch of inventory, it looks like. That's what I think. That's what I read, but we'll see that in a second. But their operating cash flow is up year over year. Could just be a timing difference, though. That's how it happens. Sometimes, like, if you don't order, if you're spending down your inventory, but you haven't ordered new inventory, in the quarter that you're selling your inventory, you're not going to have any cash outflow for inventory because you're not buying any. But the next quarter, you might have to buy a bunch of inventory. So that could have a negative swing in the next quarter. A lot of it's timing, okay? Free cash flow of 1.3 billion. Okay, so now they're back with free cash flow. Wonderful. And a 3.9 billion increase in our cash and investments in Q2 to 30.7 billion. So they had free cash flow of 1.3 billion, but their total cash went up by 3.9 billion. Interesting. Okay. Operations, record energy storage deployment. Optimus Floptimus Crime began performing tasks autonomously in one of our facilities. Oh, it was able to wipe its butt properly. Okay. And of all this financial information, this being on here is just absolutely hilarious. Cybertruck became the best-selling EV pickup in the U.S. in Q2. EV pickups. Those aren't very popular. I think Ford's cutting production, okay? So let's go ahead and look at automotive revenues. And we're going to look at the year-over-year numbers because it's freaking hilarious. So 19.8 billion of operating revenue from automotives, negative 7%. Then we have energy generation and storage revenue. This is actually impressive. Okay, this is the one thing that I really can't crap on in this whole slide deck. 100% increase in energy storage revenue. What caused that? Maybe they're just accelerating deployments. I don't know. But that's pretty impressive. I'll give them that. Okay. And then they had 21% increase in services and other revenue. I wish there was a way I could condense this, but it's a total pain. So automotive revenues, let's see if Tesla is not a car company. Divide automotive revenues by total revenues. 78% of their revenues are cars. It's becoming less of a massive car company, but it's still a car company, okay? So, let's see. Total revenues are up 2% year over year. Oh my God. Growth stock, bro. 50% per year, brah. US, that's brah. Wow. Total GAAP gross margin of 18%. So roughly the gross margins of Toyota. And remember, this is probably being helped by the energy generation and storage, okay? The cars probably aren't that profitable. So despite revenues only being up 2%, operating expenses are up 39%, and operating income is down 33%. So apparently, I thought Tesla was achieving economies of scale, and they were just making so much money. Elon was a genius at manufacturing, and yet somehow their expenses are up 39%, and their operating income is down 33%. Quite the growth stock there, okay? With an operating margin of 6.3%. This is like any other legacy auto company. Like, seriously. With earnings per share of 0.42, only down 46% year over year. So annualized, let's say earnings stay flat like your mom for the next couple of years, or for the next 4 quarters. So we annualize the EPS, it's 1.68. 1.68. That is nothing, okay? Let's say that it has a 30 PE. Okay, Tesla stock could be $50. If you give Tesla a 30 PE, it would be $50. Like, that's just outrageous, okay? But, we know it's Tesla, large cap tech, U.S. stocks, bro. They only go up. Doesn't matter. All right. Total revenue increased 2% year over year. Growth in energy generation, Cybertruck deliveries, it's BS. That thing is a piece of garbage. Higher regulatory credit revenue. It looks like Tesla is still getting subsidized by the government. So basically, they grew their energy and storage, which is the one bright spot in this whole earnings report. The Cyberclunk is a piece of garbage. And they got higher government subsidies. Wow. Let's see. What reduced their revenues? Average selling price. Really? Decline in deliveries. Let's see. How's their operating income going down? Reducing prices, restructuring, increase in operating expenses largely driven by AI. This is Elon's pet projects of Optimus Slime. Wonder how much he's spending on. I would love to see how much he's actually spending on Optimus Slime. If you are a shareholder in this company and Elon is just blowing money on this stupid robot when he should be focused on, I don't know, cars and FSD, maybe making a new model after all these years, I would be in uproar because it's a gimmick, it's a joke, but he's probably blowing billions on it. All right, let's see. Okay. So here's another funny thing. So production is down for Model 3s and Ys, 16% year over year. Production is down 16%. Model 3 and Y deliveries, the bulk of their car sales, are down 5% year over year. This is not good, okay? This is really not good. Okay, supercharger. Wow, they added more superchargers. Amazing. Now, once again, let's zoom in on this. Okay. This is a market share of Tesla vehicles by region. What do you notice about the market share? It's starting to dip, it's already flatlined. It's starting to dip in Europe. It's flatlined. It's starting to dip in China. And in the United States of America, it's flatlined, probably about to dip. Interesting. I thought Tesla was going to take over every, vehicle in the world. I guess not, though. Okay. Large cap tech, bro. All right. Then they have AI, future planned capacity. Trust me, bro. Let's see. Storage, energy storage, blah, 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 blah. Let's see what other garbage we have on here. Plans for new vehicles, including more affordable models. Where's the new model? Remain on track for, and they don't even mention anything about the robotaxi, do they? Remain on track for start of production in the first half of 2025. Yeah, I'm sure. These vehicles will utilize aspects of the next-gen platform, as well as aspects be able to produce on the same manufacturing lines as. Okay, that's good. This approach will result in achieving less cost reduction than previously expected. Okay, so profits are going to get hit. But enables us to prudently grow our vehicle volumes in a more capex-efficient manner. Dude, here they go. We still see this number here. This should help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over 2023 production. bringing up the 50% number. But they're like, instead of like 50%, vehicle deliveries, they're like, oh, now it's 50% growth in production from 2023 levels. Okay, here's one line right here. Our purpose-built robo-taxi product will continue to pursue a revolutionary unboxed manufacturing strategy. Wow, do they have the robo-taxi here? Here's a picture of our gigafactory. Lithium. Assembly line. This is an old picture, isn't it? Oh, here's a Tesla. Who is this? Who is this man driving in here? Can he be hands-free? Okay, here's Floptimus Crimes. Here's apparently the all-important task that Floptimus is doing. Everybody at Tesla's going to lose their jobs because of this stupid robot. All right, so vehicle deliveries have flattened. Free cash flow has basically trended downward over time. Net income has trended massively downward over time. Adjusted EBITDA has trended massively down. Everything is down or flat. Everything is down or flat. All right, so here's the financial statements. Let's see. Where's the statement of cash flows? Okay. So, changes in operating. Yeah, I wonder, see, changes in inventory would show up right here, right, on this line. So it looks like what happened is last quarter they probably made a huge purchase of, they bought a ton of inventory. And in this quarter, the current quarter, they basically spent it down, so they didn't have to do a lot of cash outflows for inventory. That's why you had such a huge swing in operating cash flow, I think, is they just stocked up on a bunch of inventory. I could be wrong, but because it doesn't show me. But you can clearly see a big difference is inventory, changes in inventory. And a slight increase in profit there. Good job there, Tesla. Overall, it doesn't matter. The earnings don't matter, okay? It doesn't matter if revenue is basically flat. It doesn't matter if deliveries are down. Nothing matters. As a matter of fact, the only thing that does matter is whatever looks good on this report and the hope that this company will become the futuristic cyborg company that Elon says. And I guarantee you everybody's going to talk about this 100% increase in storage, which is good. I mean, I can't knock that. Okay, that's great. But this is quickly becoming a mediocre auto company with some gimmicky things on the side. All right, talk to you later. Cheers.